Welcome back to this channel. Earlier this month I put £100 in my Monzo investment account, and in this video I want to provide a quick update on how the fund I'm invested in is performing. My plan is to invest £100 every month into my Monzo investment account and provide regular updates on how the fund is performing, like I do with my main portfolio with InvestEngine. If you're new to the channel, I'm Alex, a management consultant by day, and on this channel we like to talk about all things finance with a particular focus on how to grow your money. And if you'd like to join me on my personal finance journey with regular updates on my Monzo and InvestEngine portfolio, as well as a bunch of other personal finance themed videos, I'd greatly appreciate a subscribe. This would mean a lot to help me grow my channel. So let's get into it with this video. Before we take a look at how my Monzo investment account has performed, let's firstly take a look at how the general market has performed, as this will provide a reference point and also help explain why I've had good performance or bad performance. And let's firstly take a look at the biggest stock market in the world, in America. We can see that it's been a good month for the American stock market, measured by the S&P 500, which tracks 500 very large companies in the US. This index is up by 5.52% over the past month, which is great performance. However, if we zoom out a little bit and look at the performance over the last 6 months, we can see that November was very much a recovery in performance after a very poor September and October. And we're just about back where we were mid-September in terms of performance. But nonetheless, November was a good month for the American stock market. If we now take a look at the performance of the UK stock market by looking at the FTSE 100, which measures the 100 largest UK companies by value, although it's worth noting that many companies listed on this index are actually multinationals, with most of their income coming from outside the UK. But nonetheless, let's look at this index and let's roll with it as a measure of UK stock market performance. And we can see here that the FTSE 100 was also up over the last month. It was up by 1.06%, so not as much as the S&P, but still in the green. If we zoom out to the last 6 months, we can see that, like with the S&P, the FTSE had a bad September and October, and November was very much a recovery month. So through this data, it's very clear that although previous months had bad performance, November in isolation was a very good month for the stock market, especially in the US. And there's very clear reasons why there was good performance in November. I'm sure you've seen all over the news that inflation is falling. US inflation fell to 3.2% in October, which marked the first decline in 4 months. And UK inflation slowed to 4.6% in October. In both cases, inflation data was better than expected, and in the US particularly, the inflation level is getting close to the 2% target figure. This is important as many analysts suggest that falling inflation may mean that interest rates have peaked and will not rise any further. The reason for central banks increasing interest rates over the past couple of years have been to combat inflation, meaning that if inflation is coming down, they may no longer need to increase rates any further. And this is very important for the stock market, as when interest rates are lower, stocks tend to do well. So given this, it's no surprise that investors had positive sentiment in November, put more money into stocks, leading to better stock market performance in November. Of course, there's plenty of other factors at play, but that's the general gist of the reason for the positive market movements in November. At this point, I do need to add a disclaimer that although it seems the market's on a good path, this doesn't mean that we're going to have guaranteed positive returns for the foreseeable future, as markets don't quite work like that. We'd love them to work like that, but so many factors are at play determining their performance, and in the short run, they're particularly volatile. Plus, although many people think that interest rates may have peaked, it's likely to be a while before they actually come down, as central banks tend to be cautious, and they want to be fully confident that the inflation level will stay low when they do bring rates down. In fact, most analysts don't expect any rate cuts till the second half of 2024 at the earliest. And the Bank of England top dog, Andrew Bailey, actually put out a very cautious statement on the day I recorded this video that we shouldn't expect rate cuts anytime soon. So for these reasons, I'm not expecting the stock market to be consistent in performance to at least the second half of 2024. But this won't affect my plan with my Monzo investment account. I'm going to continue putting £100 in every single month, as I'm not looking at the stock market in a 6-month view or even a year view. I'm looking at the long term, 5 years plus, when I'm investing, and I'm going to invest £100 every month for at least a 5-year period, as that gives my portfolio enough time to recover from any falls in the market. At least historically, it's given portfolios enough time to recover from falls in the market and make a good return. And on that note, I think we've discussed the general market performance enough, and we can now take a look at the performance of my Monzo investment account. We can see that I'm up by 2.46% in percentage terms and £2.46 in pound terms, and my Monzo investment account balance is now £102.46. So I'm up by 2.46%, which isn't bad considering I only created this account, I only funded this account 2 or 3 weeks ago. And there's no real surprise that I'm up given what we saw with the general market. This particular fund I'm invested in, which is the Adventurous Fund, is 100% invested in equities, in stocks. Unlike the 2 other funds Monzo offers in the Careful Fund and the Balanced Fund, there's no bonds in this fund, in the Adventurous Fund. And if we scroll down, we can see that this fund is mainly invested in North American shares, so mainly in US equities. And given what we saw earlier with the S&P 500, that US equities did very well over the past month, this would have a large influence on why this particular fund also did well, as it's mainly exposed to US equities. So there's no real surprise that this fund has done well, the Adventurous Fund has done well over the past month. I'm going to continue putting £100 every month into this Adventurous Fund, and if you want to follow the journey, I'd greatly appreciate a subscribe. I also have a portfolio with InvestEngine. In fact, my main portfolio is with InvestEngine using a stock and shares ISA account. And if you want to check out InvestEngine's platform, I have a A to Z overview video where you can click around here and you should be able to find it. But for this video, thanks for watching.